Win-win. That is exactly what I'm talking about. That's the tone, that's the shift. And when you start hearing it from the top, when you start seeing it move from frustration to progress, you pay attention. Brian Armstrong, CEO of Coinbase, stepping out again, putting updated commentary into the market. And I already know what some of you are thinking. If everything is so positive, if all this progress is real, then why is XRP not exploding? Why are we not at levels that reflect the magnitude of what's happening behind the scenes? That's a fair question. It really is. Because logically, when you hear about constructive meetings, regulatory alignment, and forward momentum, you expect price to follow. But here's where we have to separate emotion from process. The first meetings we heard about were tense. You could feel the friction. There were ideological divides, turf battles, different visions for what crypto regulation should look like. That phase was messy. The second round, still intense, but at least both sides were trying to find common ground. Now, what we're hearing is different. Now, the word being used consistently is constructive. That matters. Tone matters in Washington. Language matters. And when people inside those rooms start signaling progress instead of resistance, that is not noise. I've been telling you for months that I'm cautiously optimistic, not blindly bullish, not disconnected from reality, cautiously optimistic. And now we're starting to see policymakers use the exact same phrase. That's not coincidence, that's alignment. It tells you sentiment is shifting internally. And yes, they are watching. They pay attention to communities like this, not because of any one person, but because of the collective voice. When thousands of people call their senators, when emails stack up, when offices are required to respond in writing, that creates pressure, constructive pressure. You want to talk about impact? This is impact. People love to say, their voice doesn't matter. In most day-to-day politics, maybe it feels that way. But this is different. Crypto is still forming its regulatory identity in the United States. The Clarity Act is not some symbolic gesture. It defines jurisdiction. It defines compliance pathways. It defines whether innovation stays here or moves offshore. If we fail to create a structured framework, capital will not wait. Builders will not wait. Liquidity will not wait. And while all of this is unfolding, other nations are not sitting idle. We are hearing increased discussion around China advancing its digital currency strategy and exploring expanded stablecoin mechanisms. If they formalize a global-facing stablecoin before the U.S. finalizes its own regulatory clarity, that shifts competitive dynamics in a serious way. The European Union already moved with MiCA. The U.S. cannot afford paralysis. So when you ask why price hasn't moved yet, understand that markets often lag policy certainty. Institutions do not deploy billions on rumors. They deploy on finalized frameworks. We are approaching that line, but we have not crossed it. Until ink hits paper, caution remains. This is why staying engaged matters. Keep calling, keep pushing, ask for written responses. Tell them regulatory clarity is about competitiveness, about leadership, about financial infrastructure for the next generation. Because if we do not set the rules, someone else will. And in this race, hesitation is not neutral. It is surrender. They win. That's the bottom line. If nothing gets done because the hate between parties is too strong, because ego is bigger than outcome, then they win and we lose. And when I say we lose, I don't mean just XRP holders. I mean the United States loses, innovation loses, builders lose, capital leaves. Projects don't sit around waiting for Washington to get its act together. They go where there is clarity. They go where the rules are written down, codified, predictable. They don't need the Wild West. Nobody serious wants that. They want guardrails. They want to know what is a commodity, what is security, what paperwork is required, what compliance looks like. The European Union already has theirs. The UAE is moving aggressively. China is exploring expanded digital currency frameworks. India could pivot at any time. It only takes one major country to say we're taking the lead, and then you don't have to wonder if we lost. You'll know we lost. And that would be because we didn't get it done. Do I think that's going to happen? No, I've been consistent. I've said I believe the odds were around 80% for passage in April. That hasn't changed dramatically. People move the goalposts every week. When odds dip, I'm wrong. When they rise, I'm right. That's not how this works. This is a process. If this doesn't get done by late April, maybe early May, it becomes extremely difficult because then you roll into spring and summer recess. They're out campaigning, they're protecting their seats. Congress works hard for about 18 months, and then they spend the next stretch making sure they still have a job. That's reality. And ironically, this bill is something they could campaign on. Republicans who are pro crypto can say they helped American innovation. Democrats who are pro crypto can say the same. That's powerful. I'm not going to hide where I stand. I will be watching who helps get this done. And if it fails, I will absolutely talk about who blocked it. That's not telling anyone how to vote. That's just transparency. Some people don't care. They vote the same way no matter what. Others look at issues. That's up to you. But I like seeing both sides at least attempt to work together. Yes, there are poison pills. Yes, there are delays. But there are also a handful of serious people trying to get this over the finish line. And for now, I'm focused on the Clarity Act and what it means for our investments, because that's what we're here for. Part two now, because this is where it gets interesting. A lot of you have been asking why the probability chart isn't sitting at 100%. Why not 95%? Why not locked in? Because nothing is locked in until there's a vote. Anything can derail this. That's politics. The strange thing is how quickly those odds spiked. We saw it jump into the mid 80s, even touching around 90% at one point. What triggered that? A U.S. senator goes on national television and says the Clarity Act could pass by April. That's not a random comment, that's calculated. When a sitting senator says that publicly, it signals internal conversations are advanced. Markets react to confidence. Then you had Brian Armstrong stepping back into alignment after previously withdrawing support in January, saying he now sees a path forward. That phrase matters, path forward. That came out around the same time leaders were speaking at a major crypto and financial forum, both sides signaling progress. That's why we saw the quick pop, but then price pulls back. You see red in traditional markets. Volatility still elevated, the VIX sitting high. When equities struggle, crypto struggles to gain sustained momentum. You can't ignore macro. Over the last month, it's been up, down, up, down. There's fear, war concerns, regulatory uncertainty. It all weighs on sentiment. At the same time, you have record tax returns hitting households. February and March historically bring inflows. People get refunds. Some invest. All we need is a spark, because if regulatory clarity aligns with improving macro conditions, the short interest in crypto becomes fuel. A serious short squeeze could unfold. And I don't say that lightly. When positioning is crowded on the bearish side and certainty flips, moves can be violent. That's what I'm watching. And let's talk about the meeting. I mentioned it before it happened. Some people doubted it. Then it occurred exactly when expected. That's why I show up daily. Information matters. The caveat is always that politics can shift in a heartbeat. Anger between leaders can change tone instantly. Amendments can be introduced to stall progress. But what I've heard suggests delay tactics are losing their effectiveness. There's pressure from industry PACs, there's pressure from voters, there's pressure from the Treasury and digital asset leaders. Delaying without voting could carry consequences just as severe as voting against it. That changes incentives. Part three, and this is where global competition becomes impossible to ignore. China exploring stablecoin frameworks backed by significant reserves of gold, minerals, and strategic assets. The EU already codified MiCA, the UAE positioning itself as a digital asset hub. If the United States drags its feet, capital migrates, innovation migrates, talent migrates, and once that ecosystem matures elsewhere, bringing it back is nearly impossible. This isn't theoretical. Crypto natives grew up in a digital-first world. For many younger builders, blockchain is not experimental, it's foundational. They don't remember a pre-internet financial system the way older generations do. I remember pagers. I remember thinking sports scores on a tiny screen were revolutionary. Now we're talking about decentralized finance, tokenized assets, real-time settlement. The world moved. We can't afford nostalgia-driven policy. Call your senators, ask for written responses, tell them clarity equals competitiveness. It's not partisan to want your country leading in innovation, it's pragmatic. Now here's the positive development. Ripple CEO Brad Garlinghouse increasing his odds of passage to 90% after a White House meeting involving crypto and banking leaders. That's significant. He has a massive following. He understands the weight of his words. Why would he raise that number unless negotiations moved meaningfully closer to agreement? In high-level negotiations, You can feel when momentum shifts. Early stages are combative, late stages involve concessions. You might still dislike the other side, but there's a shared understanding that resolution is near. That's how I read it, in a silent agreement that this is getting done, not necessarily a handshake yet, but movement toward the middle. And when both sides get close enough to that midpoint, breakthroughs happen. Eventually, you get the joint statement, agreement reached, win-win-win, crypto industry wins, banking industry wins, politicians win, and most importantly, Main Street wins. Part 4, because the structure matters. This doesn't have to be Main Street versus Wall Street. It can be the United States versus global competition. When American innovation leads, other countries often follow. That sets the gold standard. And that's what I want to see. If the bill is codified, the threat of regulatory whiplash diminishes. You don't want a scenario where a new administration reverses everything because nothing was anchored in law. That uncertainty freezes capital. When Garlinghouse moved from 80% to 90%, that caught my attention. Markets did respond, but traders take profit. Probability markets aren't static. People buy lower, sell higher. It fluctuates. That doesn't invalidate the signal. It reflects positioning. Personally, I'm watching the relationship between banks and crypto closely. If stablecoin frameworks allow banks to compete effectively, they'll embrace it. Imagine traditional institutions offering competitive yield through regulated digital products. That's powerful. We're not talking millions. We're not even talking billions. Over a decade, we could be talking trillions in value migration. Do we need the perfect bill? No. Perfection kills progress. We need a good bill. Amend it later. Adjust as adoption grows. The longer you chase perfection, the more likely you get nothing. A functional framework is better than paralysis. Now let's talk charts. XRP hovering in the low 1.40s. I want a candle close above 150. Give me 1.51 on a strong close, and I'm feeling much better. Some of you won't be happy until $3. I get it, but we build structure step by step. Above 1.50, momentum shifts. Below 1.33 on a close, I'm concerned that would signal deeper issues. Right now, I'm not losing sleep. Part 5, let's discuss upside and downside scenarios clearly. If the Clarity Act passes by year's end, I see XRP in a broad range between roughly 350 and potentially 850 depending on macro conditions. If equities stabilize and liquidity improves, capital rotates into high beta assets like crypto. Add the possibility of an IPO event and a strategic restructuring reducing concentrated holdings, and you have supply dynamics shifting. Shorts positioned from higher levels become trapped, break key resistance, and the squeeze accelerates. That's how parabolic phases begin. But if the bill fails, if negotiations collapse at the 11th hour, if pride overtakes progress, if somebody decides it's better to weaponize the issue than solve it, and we drift into recess without a vote, then we have to be honest about what happens next. I believe XRP revisits sub-dollar levels quickly, not a slow grind, not a gentle fade. I'm talking about a sharp repricing event, because markets do not handle broken expectations kindly. They don't sit around waiting for clarification. They don't give politicians time to explain themselves. They react instantly to disappointment. And right now, whether people admit it or not, a meaningful portion of this market is leaning toward passage. Not certainty, not 100%, but leaning. You can feel it in positioning. You can see it in sentiment. You can hear it in interviews. When probability shifts in one direction for weeks, capital adjusts around that expectation. Traders front-run outcomes. Institutions hedge less aggressively. Retail adds exposure thinking the catalyst is near. So if that catalyst evaporates, the unwind can be violent. Confidence, once removed, creates air pockets in price. You'll see liquidation cascades, leveraged positions forced out, short-term holders rushing for exits because the thesis they were trading just broke, and fear spreads faster than optimism ever did. That's how markets work. Optimism builds gradually, fear detonates quickly. Now here's the psychological part most people underestimate. When a widely anticipated event fails, it doesn't just affect price, it affects narrative. The story shifts from "we're close" to "they couldn't get it done." That narrative shift compounds the selling pressure. Because it's not just about this bill anymore, it becomes about dysfunction, about uncertainty, about delay, and uncertainty compresses valuations fast. You would likely see analysts lowering targets, Commentators flipping tone, traders who were bullish last week suddenly talking about protecting downside. That change in tone feeds itself. Momentum turns negative. And once key technical levels break, algorithmic systems kick in, stop losses trigger, liquidity thins out. That's how you get fast moves lower. Does that mean long-term value disappears? No, it means short-term repricing happens. Big difference. Markets overshoot in both directions. They overshoot on hype and they overshoot on fear. If we revisit sub-dollar territory under a failed bill scenario, it would reflect uncertainty, not necessarily a permanent impairment of the asset's long-term utility. But the path would be rough, and let's be clear. When markets lean toward an outcome and that outcome fails, trust erodes temporarily. Investors become more cautious next time. They demand more confirmation before re-entering aggressively. That slows recovery. So yes, if negotiations fall apart and we head into recess without action, expect a swift reaction. Expect fear, expect volatility, because when expectations break, markets don't whisper, they move. Would that be painful? Absolutely. No one enjoys watching red candles stack up, but here's the part most people miss. Markets overreact both directions. Just like they overshoot on euphoria, they overshoot on fear. Sub-dollar territory in a failure scenario wouldn't necessarily mean the end. It would mean uncertainty returned, and uncertainty compresses valuation. For those with conviction and a long-term thesis, those moments historically become opportunity zones, not emotionally easy, but strategically powerful. Timing is everything here. If this isn't resolved by May or June, the probability curve drops sharply. Not because support disappears, but because the calendar becomes the enemy. Once lawmakers pivot toward campaign mode in summer recess, legislative bandwidth shrinks dramatically. Attention shifts, priorities shift, and even strong bills can stall simply due to time constraints. Momentum in Washington is fragile. When it's there, you push. When it fades, it's hard to rebuild. Now, yes, there is ongoing discussion about executive agencies stepping in with interim clarity. Coordinated efforts between the SEC, the CFTC, and the White House could create temporary guardrails. They could define enforcement posture. They could signal market-friendly intent that might stabilize sentiment in the short term. It might even spark relief rallies. But let's be honest about what that is. It's a patch. It's not a foundation. Without congressional codification, any executive-led framework is vulnerable to political turnover. A future administration could reinterpret guidance, agency leadership changes could alter enforcement priorities, and we'd be right back in regulatory limbo. Institutions don't allocate trillions into frameworks that can be rewritten every 4 years. They need durability, they need predictability, they need law, not letters, and that's why Congress risks looking ineffective if they can't deliver here. This isn't a fringe issue anymore. You have broad industry support, major exchanges, institutional investors, banking representatives, treasury officials, digital asset advocates, retail voters. There is alignment across sectors that rarely align. When you have that kind of convergence and still fail to act, the signal it sends is damaging. It tells innovators that politics overrides progress. It tells capital that uncertainty is structural. Clarity isn't about favoring crypto, it's about defining rules. It's about competitiveness. If Congress cannot execute on something with this level of visibility and bipartisan interest, it raises bigger questions about functionality. And markets pay attention to functionality. So, yes, failure has consequences, not just for price, but for perception. And perception in financial markets is everything. Part 6 now, because this is where everything comes together. The chart today is trying. You can see it. Little green candles, small attempts to push higher, small attempts to reclaim momentum. But I don't want attempts. I want conviction. I want strength. I want a decisive breakthrough resistance that makes shorts uncomfortable and makes sideline money nervous about missing the move. That's what changes character. Right now, we're in that grind phase. The market is waiting. It's coiled, but it's waiting. And I'm realistic about that. Volatility hasn't disappeared. Macro uncertainty hasn't magically gone away. Equity markets are still choppy. Headlines still shift sentiment daily. Liquidity conditions still matter. You cannot separate crypto from the broader financial environment anymore. Those days are over. We trade in a connected system now. So, Yes, there's friction. Yes, there's hesitation. But what keeps me constructive is something deeper than just a candle close. It's the alignment in messaging. When you hear industry leaders, banking executives, policymakers, and even certain regulatory voices start using similar language, that's not coincidence. That's not random. That's coordination. That's negotiation reaching a mature phase. People don't echo each other publicly unless groundwork has been laid privately. Tone convergence matters. Words like path forward, constructive, framework, clarity, they start showing up everywhere at the same time. That tells you something is forming beneath the surface. And let's talk about Brad Garlinghouse for a second. I don't believe he casually throws out 90% odds. That's not a small statement. That's not vague optimism. That's putting credibility on the line. Leaders at that level are careful. They understand market psychology. They understand how quickly confidence can flip if expectations aren't met. So if he raises his projection that high, it suggests he felt real momentum in the room, real movement, real compromise. Now, could it still fall apart? Of course, politics is unpredictable. Deals die at the last minute all the time. But raising the probability publicly signals that internal signals are strong. So, where does that leave us? It leaves us close, not guaranteed, not locked in, close. And that distinction matters. Because when you are close, positioning becomes critical. If this gets codified, the runway for crypto in the United States expands dramatically. Institutional capital that has been cautious starts deploying with more confidence. Pension funds, asset managers, corporate treasuries, they move faster when rules are clear. Retail confidence improves because uncertainty shrinks. Builders stop looking offshore for safe harbor and start scaling domestically. That's how ecosystems grow. That's how value compounds. If we fail, though, we stall. We don't disappear. We don't vanish, but we stall. And while we stall, other jurisdictions advance. Capital is global. Innovation is global. Developers are mobile. If another region offers clarity and stability, activity migrates, and once infrastructure builds somewhere else, it's difficult to reverse that flow. So, this is the moment where engagement matters. Stay active, call your senators, don't just complain online, ask for written responses, make them acknowledge that constituents care about regulatory clarity. Watch the charts, but don't panic on every red candle. Understand probabilities, not certainties. Markets price in expectations before outcomes. Money often moves ahead of headlines quietly, but when confirmation hits, when legislation passes, when frameworks are codified, that's when acceleration happens. That's when sidelined capital rushes in. If confirmation comes, you want to be positioned, not chasing. If it doesn't, you manage risk. You adapt, you protect capital. That's the balance, that's the strategy. Optimism with discipline, conviction with flexibility. That's where we are right now.